Hey everyone, welcome back to Corporate Decoder. Today, American battery technology company just filed an 8K regarding executive compensation, and I am seeing a key detail about how they are incentivizing their top leaders. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is locking in its top executives with new employment agreements, but there is a crucial element tied to stock performance that you need to understand. Alright, let's dive into what this filing is all about. American Battery Technology Company, or ABAT as you might know it, has signed new employment agreements with its top brass. These aren't just simple contracts, they are designed to align the exec's interests with the company's success, especially when it comes to the stock price. The big news here is that on the 9th of July 2026, the company entered into new agreements with Ryan Melsert, the CEO and Chief Technology Officer, Alejandro Flores, the Chief Financial Officer, and Stephen Wu, the Chief Operating Officer. These agreements are effective from the 1st of July 2026 and run for 2 years. So let's break down what each of these leaders is getting. Ryan Melsert, the CEO, will be earning an annual salary of $475,000. That is a solid base, but it gets more interesting when we look at the bonuses. Mr. Melsert is also eligible for performance-based bonuses. This includes a target annual cash bonus of 75% of his salary, which is about $356,000. On top of that, he is set to receive $1 million in restricted stock units, or RSUs. These are basically shares of the company that he'll get over time, tied to the stock price before the 1st of July 2026. And here is a big one. He also gets an option to buy 3 million shares of the company's stock at $2.76 per share. This exercise price is based on the closing price of the stock on the 1st of July 2026. This is where his interests really become tied to the company's stock performance. If the stock price goes up significantly above $2.76, these options become very valuable. These RSUs and options will vest over time, meaning he earns them gradually over a period of typically 1 to 2 years, starting from the 1st of July 2026. It is important to note that these options have a long expiration date, typically 10 years. Now let's look at Alejandro Flores, the CFO. His annual salary is $280,000. Like the CEO, he is also eligible for a performance-based cash bonus, targeted at 75% of his salary. He is also set to receive $500,000 in RSUs, again calculated based on the stock price prior to the 1st of July 2026. And for options, he gets to purchase 1 million shares at that same $2.76 exercise price. His offers and options will also vest over time, starting from the 1st of July 2026 and expiring typically 10 years later. So this is structured very similarly to the CEO's compensation package. Finally, let's check in with Stephen Wu, the Chief Operating Officer. His annual salary is set at $350,000. He too is in line for a performance-based cash bonus, targeting 75% of his salary. Mr. Wu will receive $750,000 in RSUs based on the stock value before the 1st of July 2026. And he gets an option to buy 1.5 million shares of the company's stock at that same $2.76 exercise price. His vesting schedule for RSUs and options is also aligned with the others, starting in July 2026 and expiring a decade later. This entire compensation structure, including the agreements for the CEO, CFO, and COO, was reviewed and approved by the company's compensation committee. They even consulted with an independent compensation consultant to make sure these pay packages are fair and competitive and designed to be exempt from certain reporting rules. It is also worth noting that there are no special side deals or understandings between these executives and anyone else that led to their appointments. Their selection was based on their roles, not some backroom agreement. Now, this filing gives us the highlights of these agreements, but the full details are in the attached exhibits. This is standard practice to keep the main report concise. The company has filed these agreements as exhibits, and they are essentially the detailed contracts that govern these executive packages. And finally, the report is signed off by Ryan Melsert himself on the 10th of July 2026, acting as Chief Executive Officer. So, what does all this mean for American Battery Technology Company and its investors? You can see the company is heavily relying on stock-based compensation, particularly options to motivate its top executives. This means their pay is directly linked to how well the stock performs. If the stock price, currently around $2.5, climbs significantly above the $2.76 exercise price, these options could become worth millions. For instance, look at recent news. They recently had a big win with the US Department of Energy grant for a lithium refinery project, which was reinstated. potentially worth $115 million. This kind of news can indeed drive the stock price up, making those options incredibly valuable for Melsert, Flores and Wu. However, this also means that if the stock price struggles to get above that $2.76 mark, a significant portion of their potential compensation might not materialize. It is a high-stakes game, where the executives are betting alongside the shareholders on the company's future growth and stock appreciation, given that the company's market cap is around $341 million, and its stock has traded between $1.55 and $11.49 over the past year. There is certainly room for significant movement when companies like this give out large option grants. It signals strong confidence from management that they can significantly increase the stock price. It's also a form of dilution for existing shareholders, since these options can be exercised, increasing the total number of shares outstanding. The risk I am watching is whether the company can consistently deliver on its strategic milestones to justify the stock price appreciation needed to make these options truly rewarding. My biggest concern is the potential for dilution if the stock doesn't perform as expected and the sheer number of shares tied to these options. What I am actually looking for is how these executives continue to drive the business forward to unlock value for shareholders and themselves. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like this video and subscribe for more of these deep dives, and join our Discord community linked in the description.